Welcome to the Real Estate Jam session. Man, we got a great show for you today. We're going to be talking about how to use private money to fund your real estate investments. And for this, my guest is Jay Connor. Jay is a published author. His book was Where to Get Money Now. And he's also somebody that's been doing real estate investing by using private money for a lot of years. So make sure you check out the video. Go up top here to the YouTube channel, give us a like, and while you're there, subscribe. Now, if you're new to the channel, my name is Joe Killinger. I've been a real estate entrepreneur for 20 plus years. And I use this platform to bring on guests and myself. We talk about what has worked for us, what has not worked for us. So I think it's really a great way for you to learn about how to become a sophisticated real estate investor. At least I hope so. So again, when you go up top, make sure you give this video a like, and while you're there, subscribe. Thank you. Welcome to the show, Jay. Glad to have you on. I really, I did a deep dive into your background, and a lot of our investors they're newer, and I think and I know when I was getting started as a real estate investor, I really had to focus on just the traditional means of financing. Find my property, get pre-approved, find my property, do the deal. But I think today can be very enlightening in that you can give us other avenues of way to fund our investment. So I really appreciate you taking the time to come on today.
Well, thank you for having me come on, Joe. I tell you, I did the same thing. I made the same, if you will. It really wasn't a mistake. It ended up being a huge, actually the biggest blessing in disguise in my business. But here I'm in a really, really small market. I'm in Eastern North Carolina. Our total market that I invest in has only got 40,000 people, if you can believe that. But we do 2 to 3 houses a month. We fix and flip most of them. And our average profits for the past year is $71,000 per house, with a median price now of only about $300,000. And like you, I did the same thing. The first 6 years, from 2003 until 2009, first 6 years, all I did was read books, rely on my manufactured housing experience from the past. And like you, I thought, well, I looked for houses in the multiple listing service, which I did. You could actually find a house in the multiple listing service back then.
Yeah, it's difficult right now.
As contrasted to our market that we're in today. But yeah, I'd get a house under contract. I'd go to the local bank. I had a great relationship with my banker. And Joe, I tell you, I remember it like it was yesterday. I called on this very phone. We actually have landlines still in North Carolina. I called up my banker, whose name was Steve, in January 2009. This is after 6 years of being in the business, doing a lot of deals. And I had 2 houses, Joe, under contract to purchase. These 2 houses represented over $100,000 in expected profit at the time. And I learned like that on the phone that I had lost my lines of credit with no notice, by the way,
right,
and no way to fund these 2 deals. And so I hung up the phone. I called a friend of mine named Jeff. He lived in Greensboro, North Carolina at the time. And I told him what had just happened. And he said, well, welcome to the club, Jay. I lost my line of credit last week at the bank too.
Yeah.
And I said, well, what are we going to do? And Jeff told me this phrase that I'd never heard before called private money. And so I researched it. I learned all about it. I put my program together. That's what we'll talk about here in a little bit. It's like opposite from the banks. We make the rules. There is no application process. You're already approved. So I put my program together and I started teaching people here in our local area what private money is, what self-directed IRAs are. And Joe, in less than 90 days, I was able to attract over $2 million in new funding that I did not have. And that was $1 million more than I had down the street at the bank. So again, biggest blessing in disguise in our business. And our business tripled within that first year of using private money. Because you remember back in 2009, you had all the foreclosures going on and nobody was lending you money. I mean, your banker will give you an umbrella when the sun is shining, right?
Right. So, people don't realize those lines of credits can be gone. They can say, you know what, we're not doing this anymore, and you're done.
Exactly. So again, this whole world of private money will put the investors in the driver's seat and really put you in control of your business.
Yeah. I think, private money doesn't need hard money, correct?
Private money is
spell out the difference?
Yeah, private money. So hard money is typically institutional money. Typically, a hard money lender is a broker of money. And the hard money lender companies will go out and they will raise money typically for a fund that they got all these individuals investing in the fund. And then your hard money lender or broker will then loan it out to real estate investors, jack the rate up, and they make most of their money most of the time off of origination fees or points.
Yeah.
Well, in this world of private money, there is no origination fees. There are no points. So the bottom line difference is institutional money, where the hard money lender makes the rules. Most of the time, they are going to pull your credit. In this world of private money, your credit's got nothing to do with it. All the loans that we borrow are collateralized loans by the real estate that the real estate investor is buying. And I mean, just real quick, the big differences, other than you're doing business with individuals and you're teaching them, the big differences are interest rate. Average hard money lender today is 14%. Some are 10 and 12, some are more, some are less, but it's going to hang around 12 to 14%. Private money, I'm paying 7 and 8%, 7 or 8%. No origination fees from private lenders, always points. The length of the term of the note is either 6 months, 9 months, maybe 12 months of a hard money lender. All of my notes are either 2 years or 5 years, depending on if the private lender is loaning out investment capital or retirement funds. And here's another big one. How much is the lender, hard money lender, going to give you when you buy the house? In other words, what percentage of your purchase price are they going to advance? Typically between 65 and 85, 80% of your purchase price. Who's got to come up with the rest of it for a down payment? We do, but not in this world of private money. We get 100% of our purchase price and 100% of our rehab cost if rehabbing is involved. So the only way that math works, Joe, is if you're buying the property at a discount. So for example, we typically will borrow up to 75 or 80% of the after repaired value, not of the purchase price, but of the after repaired value. Well, I always bring home a big check. In fact, I just brought home a check yesterday for $18,000 at purchase. Well, a real quick example is, let's say you got a house that's got an after repaired value of $200,000. Now I know in LA County you can't even get an outhouse for $200,000. No, I don't know if your audience knows what an outhouse is, but anyway, let's say you got a 200
doghouse.
Doghouse. That's right, a doghouse. Let's say you can get a house after repaired value of $200,000. Well, when it's a major rehabs involved, I buy them at 50 cents and 40 cents of after repaired value all the time. But if I can borrow up to $150,000 on a $200,000 after repaired house, if I buy it for $100,000, I'm bringing home a $50,000 check. But I'm not going to do that unless there's rehab involved. But we always borrow more than we need to buy the house for carrying costs, etc. And then another big one is monthly payments or no monthly payments. In this world of private money, we can structure the deal to where your lender doesn't get any monthly payments at all or any payments until you cash out of the house. Now, we got some private lenders that are elderly and they need the monthly income. So we let the private lender decide how often we're going to be making payments to them.
Okay. Now, just to go back on a hard money loan, what is what percentage do you have to give for the origination fee? I know it's super high.
Yeah, so on hard money, it's typically going to be around 4 points.
Okay, so 4 points plus 12 to 14% interest.
Yeah. Oh, and then we didn't talk extension fees.
Oh, yeah,
so,
yeah.
If you haven't cashed out in 6 months or 9 months, your hard money lender is probably going to extend your note, but what do they want? More money. In fact, I know one hard money lender. And by the way, Joe, let's be clear. No disrespect against hard money lenders.
Sure.
I've got great friends that are hard money lenders. In fact, I got friends that have learned from me on how to raise the private money. Then they go open up their hard money shop.
Yeah.
But it's all the same money. It's all the same
I've used
money.
hard money before, and it worked out we were flipping, and we used it, and it worked out very well for us.
Yeah. It's just, I say, if you don't have any private money lined up,
Right.
then don't miss out on the deal if the math makes sense. But you can just save so much money and be so much more in control of your business when you're making the rules instead of the lender making the rules.
Yeah. I might have had this private money available. I just didn't know to get there. So that's why today's video, I think, is critical. So if I want to start buying properties, and I want to go for private. Now, private money works if I want to buy and hold for a certain amount of time too, right?
Oh yeah. So that's the beautiful thing about private money. Not just flipping. There's no. I mean, if you want to buy and hold, it all comes down to how you structure the deal. So, for example, I'm not going to pay 8% on a buy and hold property.
Right.
The only way I'll pay 8% on a buy and hold property is if I buy it. Let's say it needs some fix up, and then maybe I season it with having a renter in there for a year. Then at that point in time, I'm gonna want to go to a conventional lender and refinance that property, and get your interest rate, down to 4 or 5%. But you can always use the private money to get in the deal.
And then refi.
Exactly.
So if I'm a new investor, what are my first steps? How do I go out and find this private money?
Yeah. So let me start, Joe, with the 3 main categories of where the private money lenders are.
Okay.
The first category is your own warm market, your own, people in your cell phone, people on your email list, people you got some kind of connection with. The second category are what I call your expanded warm market. I hear people tell me all the time, well, Jay, I don't know anybody with money. All my people are broke. Well, first of all, I don't believe them. I think they're just intimidated and they haven't been educated yet on what to say and how to, carry on a conversation. So I say also expand your warm market and go to where the money is. I say the more money you water in, the more money sticks to you. So, and your expanded warm market are all of social and community networks, such as church, Rotary Club, Chamber of Commerce, any kind of associations out there that you can, get involved with and offer to serve. So just, grow your network. And then number 3 are existing private lenders. So if I may, let me start and just hang out for a couple of minutes on, well, how is it that you work with your warm market? Well, there's 5 easy steps that I use. And I started using them back in 2009, and I still do today. Step number 1 is make your list.
Yeah.
So making your list means going through your own contacts and making your top, I call it your top 44. And we're going to give out a very, very recent money guide that I just wrote that goes into the detail on all these steps. But you make your list. Number 2 step is called just the pre-qualifying conversation. Simple conversation, casual conversation. Here's the whole deal, Joe. We are not begging, we're not chasing, we're not selling, we're educating individuals, because a private lender, simply put, is an individual that loans you money, the real estate investor, from either their investment capital or their retirement accounts. So step number 2, after making your list, is a casual conversation that may take place over the phone or in person. And, the conversation would go something like, hey, Joe, hadn't talked to you in a while. How you doing? How's the golf game? A little chit chat. And then you simply roll right into it. You say, Joe, as you may know, I'm investing in real estate these days, and I am positioning my company to take advantage of the opportunity to help a lot of people that are in foreclosure, because on this side of COVID, we got two big categories of people in foreclosure. Those that were already in foreclosure prior to COVID, and then all those people that are going into foreclosure because of losing their jobs. So we're going to have a lot of people to serve. And so we're opening up my business to people that I know and trust. And Joe, I've got a program that may or may not be for you, but quite frankly, unless you answer yes to the following question, there's no need for me to give you any more information. And that question is, do you have investment capital or retirement funds not giving you a high rate of return safely and securely? Now that's called the direct method. That's just putting the question out there. That's just putting it out there.
Yeah.
And so we have another method called the indirect method, which is what I have used actually more than the direct method. The indirect method is called, parenthetically, I need your help, asking people to spread the word as to what you're now doing. In fact, Joe, one of my very first 250,000 private lenders, when I learned about private money, here's exactly what I did. I went up to them after church on a Wednesday night at Bible study, and I had known this person for a long time, and I asked him to speak with me confidentially for a couple of minutes. And here's exactly what I said. Now, by the way, this gentleman was the original Zenith television dealer in Morehead City. And if you've got any audience members or listeners that don't know what Zenith TV is,
they may not.
That means they're under 40 years old.
Yeah.
That's before Walmart came to town. Anyway, his name was Wayne. I walked up to Wayne. I said, Wayne, you know everybody in this town. And he did. Yeah. He knew everybody. He had put a television in everybody's house in Carteret County for years. Yeah. And he was very, very involved in the Rotary Club. I said, Wayne, you know everybody in this town, and I need your help. I am now opening up my business by referral only, and I'm paying insane high rates of return to people that want to invest with us. So when you hear somebody complaining about low rates in certificates of deposit or the volatility of the stock market, would you refer them to me and I'll tell them about my program? Well, what do you think Wayne said? He said, well, now, Brother Jay, what you got in mind? And I said, are you saying you and your wife might be interested? He said, well, maybe. He says, we're not hardly getting nothing in CDs. Well, back then you could actually get 3% in a CD. Right now it's 0.17%. Yeah. But anyway, he said, yeah, we might be interested. He says, what you got in mind? I said, well, it depends on the deal. I said, what sounds high to you? He said, well, we're getting 3%. He said, I don't know, maybe 5 or 6%. I said, well, I can't pay you 5 or 6%, Wayne, but I can pay you 8%. He said, put me down for $250,000. Yeah. So it's a matter. And so that method is asking people to just spread the word, right? Asking for help to spread the word on your program. That's step number 2. Now, step number 3 is when someone is interested, I've got a 16-minute audio that I wrote the script and recorded. I've personalized this CD now for over 1,000 people over the years. Yeah. Anyway, I titled the CD, the audio, we converted it into an MP3 now and a YouTube link. I title it Stress-Free Investing. So it's 16 minutes of audio that introduces someone to this world of private money. It doesn't spill the beans. It doesn't teach your program, right? It's one of the tools that I use and my inner circle uses. Step number 4 is the one-on-one meeting. Now, the one-on-one meeting is when you actually spill the beans and you teach your private lending program. You teach them what private money is. And I've got a great PowerPoint that myself and my inner circle uses. But what is it? What are you paying? How are they protected? How can they get their money back in case of an emergency? We give everybody a 90-day call option. So you teach them your program, teach them about self-directed IRAs, because this is so important right here, Joe. Over half of our private lenders are using their retirement funds to fund our deals. And so here's an actionable item for your viewers and listeners. Everybody needs to establish a relationship with a self-directed IRA company. And without that relationship, you teach people about self-directed IRAs, they're not going to have anybody to meet to transfer their funds to. And they can transfer their retirement funds, or a portion of them, penalty-free and either tax-deferred or tax-free. So that's step number 4. We teach them the program. And then step 5 is they simply tell us how much they got to work with, and we go find a deal as soon as possible. Here's what's interesting, Joe. Since 2009, and I've got over $8 million that we just moved from projects to projects to projects, I've never asked anybody for money. I've yet to ask anybody for money. I teach them what it is, and then we go find a deal and come back. Here's another interesting thing. It's all about positioning. I've never called up somebody and pitched a deal. Here's why I teach and practice the money comes first. I never tell a new potential private lender about my program and a deal in the initial conversation. I already sound like I'm begging without even saying so. So if I'm teaching the program and I got a deal to fund, I'm screaming, I need your money. So the money comes first. We teach them the program, they're on board, we know how much they got. And then when I call them up, I don't ask them if they want to fund this deal. That's the most stupid question I could ask. Of course they want to fund the deal because they've been waiting for the phone call. So I call them up, and here's exactly what I tell them. Hey, Joe, I got great news for you. I can now put your money to work. See, I already know how much you got. You've told me how much you got, and you're waiting for this phone call. So I'll call you, Joe, I got great news. I can now put your money to work for you. And I'll tell them 4 things about the deal, and this is even more than they want to know. I got a house over in Newport. That's where it's located. I don't give them the address. They could care less. I got a house over in Newport. The after repaired value is $200,000. The funding required for the deal is $150,000, and you need to have your funds wired to my real estate attorney's trust account next Thursday for closing. End of conversation.
Yeah.
They just been waiting. I mean, so I teach them the program, and now they're chasing us, waiting for the call.
Now, Jay, when you were starting off, did you create a pitch book, or how did you put it all together? Or?
Yeah, so I have a PowerPoint presentation that we use for groups. So I've raised, I raised $1 million in one private lender luncheon, where I'll invite potential private lenders, have my team there, my accountant, my attorney, my realtor, all that. And so we use a PowerPoint for groups. We use the same PowerPoint for Zoom. But when it's one-on-one, I don't do the PowerPoint because one-on-one, it just sounds too salesy. I just have a very simple, casual conversation, go over the points of the program. And then as a recap as to what I told them, I've got a nice, little brochure that I give them that recaps all the points.
When you're on your first pitch, I mean, I'm sure when if you hadn't done a deal yet, what questions they asked that you had to overcome? I'm sure it was like, well, you haven't done this before. I'll do it on the second or third deal. Did you get that?
Well, I had already been in the business for 6 years.
Okay.
Right? So I already had a lot of deals underneath our belt.
Okay.
And so the question you're asking me, I hear it all the time. On a brand new real estate investor, the new investor will say, who's going to loan me money?
Yeah.
And I've never done a deal. Yeah. So there's more than one answer to that. The first answer is, if you, the real estate investor, do not pay your private lender, the property does. Now, what in the world does that mean? We're not borrowing any unsecured money. All the loans are secured by the real estate that you are buying using your private lender's money. Well, since we've got a conservative loan to value, they've got at least a 25% equity cushion. Now, the private lender is not going to want to mess with the house or the property. By the way, this same money, Joe, works for commercial as well. Small apartments, duplexes, quadplexes, It's all the same money. So the private lender don't want to mess with it. That's why they want to be passive, and they just want to sit back and collect checks. But so number one, they're protected by the collateral. Now, another answer to that question, in addition to that, is when you've got a brand new real estate investor just starting out, then that investor, if does not have the confidence in what they're doing, and, telling people what private money is and all that. What they can do is they can leverage a relationship with a current real estate investor. You say, well, what would that relationship look like? Well, once a real estate investor learns about private money and knows the program and can teach it to people, guess what? You go, first of all, probably want to be involved with the local real estate investing association or meetups or other real estate investors. You go to a seasoned real estate investor and you say, look, I'm brand new. I haven't done a deal, but I know about this thing called private money, and I can raise us some private money. Well, if you're bringing private money to the table, then that seasoned real estate investor will probably joint venture with you, give you a percentage of the deal, and guess what? You get to work alongside a seasoned real estate investor. You learn how to raise the private money so you can leverage that relationship.
Yeah, having that mentor when you're getting started is key. But knowing how to access, like you're talking about your retirement accounts, people aren't thinking like that. It's a great way to get started.
Absolutely.
Yeah. Well, I know we're getting a little long here, Jay, and you're busy. So, all right, give us your best tip for a new investor in private money. What should we just start cold calling people? Family, sphere of influence is what I call it. Sphere of influence.
So, there's always going to be deals. Always going to be deals, right? Focus on getting the money lined up first. I've got some friends that are fellow educators in this real estate investing space.
Yeah.
And I hear them say it, and I cringe when I hear them say it. They say, oh, go get the deal under contract. Go get the property under contract. The money will show up.
No.
Where?
Yeah. No, I'm with you. Because now you put yourself under such pressure. You've got this property, and you could lose, because you have to put your deposit down. You could lose that deposit. So why put yourself at risk? Get the money first, then the asset. There's enough stress in this world.
Well, and just think how much more confident a new real estate investor is going to be when they got $500,000 burning a hole in their pocket to go make offers. I mean, they're going to make more offers. They're going to be more confident, with their offers and et cetera. And the money guide that I'm going to give to your audience goes into detail and all this stuff, and will really get them on the fast track. I say private money is the fastest way to your next deal for a couple of reasons. If I go get a deal on contract, I don't have to go to the bank. I mean, I'm surprised anything ever closes,
You're right, yeah.
Using traditional stuff, 45 days. I mean, typically there's not even an appraisal involved in this. We're in this private money. We always get a CMA, comparative market analysis, from our realtor, so we actually know what it's worth. But it's private money is the fastest way to your next deal or your first deal, because first of all, after reviewing thousands of property lead sheets from potential sellers of off-market houses that are not even in the multiple listing service, well, only 13% of them people will sell to us creatively on terms, seller finance. And that's off-market houses, buying subject to the existing note. 87% of them require all the money, right?
Yeah.
And of course, anything in the multiple listing service is going to require all the money, et cetera. So that's the fastest way. So what's my advice? Focus on getting the money lined up first, and then you can confidently make your offers.
Yeah, I agree completely. Well, Jay, thank you very much for coming on the show today. Very much appreciated. I'm going to put a link to your book, Where to Get Your Money Now, I believe is the name of the book. We'll put a link to that.
The book is free, and it's a couple of bucks for shipping. But if you don't mind as well, Joe, put in the notes the link to the brand new free PDF that they can download. That's at jayconner.com/money guide. And of course, I'm an ER, not an OR. CONNER, JAYCONNER.com/money guide.
That's a lot for me to remember. I might call you after this. But
That's
yeah,
all right.
we'll put the links to all of it below, and that way they can reach out to you. And folks, if you're watching, thank you for tuning in today. And if you haven't done so, make sure you go and like this video. Make sure you subscribe while you're there, and tune in next week.